The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we get the Dow up 150, Nasdaq's up 40, S&Ps are up 17. We get gold flat. Silver is up 20 cents. You got bonds down almost 2 points. King dollar's off $1.47. Euro's up 58. And you got a jobs number that came in. That was 165. You get a spike up. Darrell Martin, what's going on?
What's going on, man?
How you doing, man? You ready for some well, I'm sure you already had some great action.
Oh, my gosh, yeah.
Yeah, there's no doubt, folks. The S&P is spiking the high out here.
Follow the trend, man. Just follow the trend.
There's no doubt about it. And listen, folks, if you haven't test drove the Nadex product yet, come over to our website at TFNN. You're going to see the banner in the very top. On the side, you can open an account. They'll put $25,000 of funny money in it. And, of course, if you happen to be in the Boston area, Darrell and I are going to be up there on May 11th. We're going to be doing a workshop sponsored by Nadex. That's going to be from 8:30 in the morning to 12:30. And, of course, each and every day you can listen to Darrell right here at TFNN from 1 to 2 Eastern Standard Time. So we want to bring up Darrell's analyzer right now and take a look at this market, because we certainly have action extraordinaire. Now, the euro, you talk about the euro going from up, down, and all around. There's been some heavy action on that this morning, no doubt. The euro, folks, right now is at 130, 132, and what we have with it is that that's up 74 ticks. It's gone from up 74 ticks to down about 20 ticks and back up 72 ticks. So the volatility is out there. The Nasdaq is right up at the over the highs. The small caps get interesting because the small caps, folks, are just testing their highs right now.
Yeah.
So what I'd like to do, Darrell, is this: is if you can bring up that analyzer. And let me bring this over here for a second. Because what we do have is this. So watch how this shakes out, folks. The S&P, no doubt. The SPY, the S&P, you know, spike high. Is it a spike high? Well, we'll find out whether it's a spike high. And specifically what a spike high, folks, is this. Is that the last run up, okay, gets up over. And then what you have is this, is that what we haven't had yet is that big rush, okay? The S&P gapped higher. It's up 17 right now. What I'd really like to see is one more spike for about 4 points. And the reason being is that thus far in the marketplace, this is what's actually a mind blower right now, is that this is still the lowest amount of volume we've had. Right, you know, as of literally now, this will change because we're only 40 minutes into the marketplace. But what does happen in the volume is that the gauge, this is the least amount of volume we've had in the past year in the first 40 minutes of trading. Now that can change. There's no doubt about that. So on your analyzer, let's bring up the S&P. And what I want to see in the S&P is this, Darrell, is that right now we got it at 1610.50. And the euro is up 74. Actually, should I go to oil? 1 second, hold it. Because the oil market's all the way up at, this is going to be interesting too. So what the oil market has just done, folks, is this. The oil market has just come into the ice, and thus far, it hasn't been able to handle it, and that price point is 95.12. We got the 95.66 this morning, and we're at 95.02 right now. No, I'd rather go into the. What I want to do, Darrell, is I want to sell the S&P. That's what I want to do.
Any mini money mo.
Yeah.
There we go. All right, S&P, we got it. So you're ready to sell the S&P? Well, we did just hit a 1.5 dev on it, man, and it's been working hard to figure out what to do next. Right there. See that? How we hit that 1.5 deviation level?
You know what? I'm having a hard time finding your screen. I got it. Okay, cool. Okay.
Yeah. So right there. We get that 1.5 deviation.
Yes.
So so it's trying to figure out what to do. I mean, this is the point to.
Well,
What I
want to do.
That's about an 80% probability of exhaustion right there. So.
Well, what I want to do right now is that if you can take that analyzer, I want to sell this S&P right now.
Right.
And what I'd like to do, the way the analyzer works, folks, is this: is that it takes live feeds from the Nadex platform, and what it will do is going to give you the best spread. And I'm talking about a spread. I'm not going to do a binary here, okay? I'm going to do a spread, and what I'm doing specifically is this: is that the S&P right now is at 1610.75. You have the gap higher. The amount of energy that comes out of the market is huge, no doubt. Now, it's very tough for the market to basically sell off on a Friday. There's no doubt about that, particularly after a gap like this. So what I'm looking at is this, is that the first gap up, folks, had 8.6 million shares traded. And the second gap, well, we went over that high with 7 million, but what's going on right now, we're coming into that, and it's basically coming in with half the amount of volume than the 7 million, never mind the 8 million. So what I'm looking for is that I'm looking for the S&P right now, you get it up 18. All I actually need here, I suspect that in the Nadex platform, is I'm going to need about 4 or 5 points. That's what I'm looking for, Darrell.
So you're going to make about 5 points there. Okay, that'd be 50 ticks. And how long do you want for that to happen?
I'll go, I'd like to get to about 1 o'clock this afternoon.
Okay, we got 12. We won't have 1 o'clock until the end of the hour. We do have 4:15 though. So
4:15 works. That's even better.
All right. So looking at this right here, we got your best choice for what you want. About 8 ticks. Now understand, 8 ticks on Nadex is only 0.8. Okay.
Yes.
So you're not, you're talking not even a point, a whole point. Be looking at the 1590 to 1620.
1590 to 1620.
That'd be the closest one. That gives you a 2-to-1 potential risk reward.
I'll
you could
take
sell
that.
at 1610, and you could buy back. Like you said, 4 or 5 points lower, which would give you the ability to. I mean, that'd be great. So that's what you'd need right there. So that'd allow you to basically take about a 30-point profit on the trade, 30 to 40-point profit, I guess. Yeah, on the trade. Now, are you using a stop loss? Or using no stop at all?
No, there'll be no stopping it. Okay, here, hold. What one am I'm going to do the 1620, 1590, right?
1620, 1590. Yep.
Okay. So what happens here, folks, is this: my risk on the top side turns around. Well, it could be 10 points. That's what that comes down to.
Yeah, exactly. So that was the one. If you wanted 415, that's why you had that.
Okay, so if we put, tell me, set up that trade. If I turned around and put 1 or 2 contracts on, how much am I risking?
You're risking $100 a contract.
Okay, that's good. I'll take that.
Now that's if you leave it on until expiration. You take no stop.
No, I'm with you. Okay, so let's set up 2 contracts. This always gets interesting on gap aways too, folks. There's no 2 ways about it.
And so basically what you're going to do is you're just going to click on the sell button right there to pop up your ticket, and then you're set to go. I mean, it's pretty simple.
So can you walk folks through exactly how this analyzer works, Darrell?
Yeah, what you're going to do basically is you're going in and you decide you want to make a trade. And there's a lot of different ways to, trade on Nadex, as you hear on my show every day.
Yes.
I go into, random, there's just a lot of different ways to trade it. And so what I'll do is I'll go in here and I'll go, you know what market do I want to trade? You're like, I want to check out S&P 500 and Eurodollar. So I'll just select those 2 markets, and then it'll automatically pull all the spreads up in those markets, okay? So there's all the buys, all the sells. And that's obviously a lot of information to try to digest. Do you see all that right there?
Exactly.
So I'm like, well, what do I want to do? Okay, I got that logged in now. Close that out. Well, I want to sell. So that's my first filter, right? I don't need to see the buys if I'm going to sell.
Right.
So now I got rid of every buy, so I'm not having to worry about. I just cut everything in half. And now I'm going to go in here and go, you know what? Well, what is my minimum like break even distance or whatever that I might want to choose?
Yes.
And I like to choose at the market spreads.
Yeah, no, there's no doubt. I know what you're saying, man.
What that means is I have less than 10 ticks to break even. Is what that means.
Right.
So now, and 10 ticks. Now some of these like S&P 500, 10 ticks is not 2.5 points. It's only 1 point.
Right.
Because Nadex ticks in 0.1 versus like the minis, taking in quarters.
Okay.
So 10 ticks on here is literally a 1 point move. Not a big, not a big deal at all. And I can make it tighter if I want to. So there's a whole section right here where you can make it even tighter. And so now I've narrowed down, from having all those that I had up, because there's a lot on there.
Yes.
I went in and I narrowed that down just by clicking that button. Okay. And then from there, I can go even tighter if I want to. What this is doing is it's allowing you, instead of, notice I haven't done any math. Have you noticed that?
Right.
I clicked a button.
Right.
Okay. I haven't added, subtracted, multiplied, divided. It's just, I'm just clicking a button. And I can say, you know what, I don't want to risk more than, let's just say $150 on a trade. Okay?
Yes.
I can put that in. It'll now eliminate anything that has more than $50 risk on the trade. Okay? So what it's doing is it's letting me narrow it down. And then you said, you know what, I want till 4:15 on these things. I want at least till 1 o'clock.
Right.
Well, 1 o'clock is a few hours away, so I could say, you know what, give me at least 120 minutes here. And then it's going to narrow it down further. And there's our trade.
That's amazing.
Right there. So I didn't do anything. I just said, what do you want? What do I want? I want to have till the end of the day. I want to be able to do, this, and this, and there's my trades.
And what happens,
so
folks, what's so neat about the Nadex product is that the trade can actually get against you, particularly if you're trading these currencies. The euro would have been a perfect situation this morning, folks. It wouldn't matter whether you're long or short the euro this morning in the product because of the spread. Both of those positions would have made money. It just depends whether you would have taken them off. Because this is what the euro has done, folks. It's pretty cool, actually. The euro started out up. It was at 131. It goes all the way down to 130.44, and now it's already back to 131.37. And it's going to give it up right here.
Euro is crazy, yeah.
Yeah, it's going to give it up right here. It's amazing, actually. This euro, man, I love trading this euro, man. I'm telling you, man, it's sick. 877-927-6648. I'm sorry, go ahead.
Oh, yeah, I was like, and using those deviations helps you know when it's ready to give it up, when it's done.
Yeah.
So it's very, very helpful.
There's no doubt.
We'll go over those when we get back from the break here. Or do we have a break coming up? We don't have a break coming up.
Not yet.
Yeah, it's called the number out. I was like, we got a break. Okay, so let's go over these deviations. Like, how do you use this? Oh, now we got a break. Okay. We come back. We're going to make sure people know how to use these deviations on futures, forex, and on Nadex spreads and binaries, because this is huge and it's very simple and very powerful.
Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us out here. You stay right there, folks. We had the Dow up 150, Nasdaq up 40, S&Ps are up 18. We're going to be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow Industrials, folks, just hit 15,000. We're talking with our man, Mr. Darrell Martin, and what we're talking about is the analyzer that Darrell has. And, folks, what you can do is this, is that you come over to our website, you can open the account at Nadex. They'll put $25,000 of funny money into it. And, of course, don't forget, each and every day, 1 o'clock, 1 to 2 Eastern Standard Time, Darrell has his own program. Always trading a Nadex product out here. Okay, so talk to me about what we're looking at here.
All right, what we got here is they're deviation levels.
Yes.
Okay, they're pivot points. Okay, but they're not pivot points in the sense of using like historical open, high, low, close of yesterday.
Right.
And one of the things that I think is missing, and I think you probably agree with this, most traders don't have statistics in their toolkit. Right?
Right.
So they go in and they have technicals. Maybe they have fundamentals, depending upon if they read them correctly, use them correctly, more of a warning sign than anything else. They have, maybe they got some seasonals, but rarely do they have statistics. And what I mean by statistics is the probability of how far something's going to move within a given time frame. And so, we all hope that everything's going to go to the moon. If we sell, we hope that it's just going to keep crashing down. But it's very important to have a realistic expectation of movement, so that way you know where to tighten stops.
Right.
Where to stop adding on to a position.
Exactly.
Yeah, where to take profit, where to tighten stops, when to stop adding into a position.
Yes.
And so well, how do you do that without having again to do math? And that's what a lot of all these diagnostic tools are about. They're about doing the math for you. And so what I do is I take expected movement, which is implied volatility. That's what that means. Out of the option price. This big long formula, and the server does it for me. So I didn't program it, but I gave it to a programmer. He programmed it for me.
Yes.
And it goes through and it scans 16 different options. It pulls the expected movement out of their pricing, and then it plugs it in on this page for you. And then what I do, I plot them here on my charts.
And that's in real time, right?
It's every day. Yeah, it does it in real time every day it's a 24-hour period of time. Exactly.
Right.
So every night at 8:15 p.m., bam, they're updated. Okay, so we got to collect data from all the exchanges. And like Russell, we have to wait on their settlement prices and everything else to come through. And ICE takes forever to post settlement. So once everything posts their settlement price, and settlement's huge, especially on the futures market, because that's what everything's based on.
Right.
That's your mark-to-market. That's your option expiration. There's a lot of things. Settlement is the number to not do last close on your 5-minute chart from yesterday, but the actual settlement by the exchange. And so we go to that settlement price, and a lot of people don't know what settlement is, but it's really simple. Instead of going in and just taking like the last tick or the last quote of the day, which could be completely random. I mean, we've seen this like I think Apple, right?
That's right.
All over the place. They go and they take, say on the S&P, they'll take all the trades from the last 30 seconds before 4:15.
Exactly.
And then they'll take every price that was executed at in those last 30 seconds. Okay?
Yes.
Once they do that, they then go in, and I actually even have an example down here. There we go. They'll multiply it times the volume executed at that price.
Okay.
And then so you get that big number, this weighted value of each price. Okay?
Right.
They add it all together, and then they divide it by the total volume in the last 30 seconds. And that's where they get settlement. So that's the long, complicated way of how settlement comes up. And they post it on the CME's website every day,
And what happens with that, folks, which is great for all of us, is that it circumvents basically painting the tape in the last 1/10 of 1 second, which they do. You see that in the equity market quite a bit.
Oh yeah, you see some crazy, insane stuff in the equity market.
Right, whether it's up or down. You know what I mean? And what that's all about, particularly in high volatile days. I remember when we were basically 2008, 2009. You'd get, even on bad days, you'd get a couple ticks up at the close, and what that was all about was a large operator just trying to push. Well, they'd actually execute a trade above the market for their own portfolios, so that the margin requirement would be different that night. So it's it's pretty wild, man. Watching how that shakes out, man. Do you know what I mean?
Yeah, I mean, just some of the games that are played. Now, and a lot of times you don't even know this stuff. I mean, I didn't know all this stuff when I was trading, originally.
Yes.
And, I had to dig into it and learn it. And some of that stuff you learn, and some of the stuff you learn the hard way, right?
Yes.
So the goal here is to not make it the hard way. And so we do is we take that settlement value and we add it in. And I'm going to show you what I do with it, how I use it on trading.
It's a beautiful thing. You stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow to the moon, folks. We're over 15,000. We're up 173. Nasdaq's up 45. S&Ps are up 21. Gold is up $3. Bonds are down almost 2 points, and King Dollar's up 272. We're going to be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now up $1.75. Nasdaq's up 46. S&Ps are up 21. We got our man, Mr. Darrell Martin. And folks, don't forget, if you happen to be in the Boston area, Darrell and I are coming, and it's going to be a week from tomorrow. Time just flies. Wow. It's pretty amazing, isn't it? From 8:30 in the morning till 12:30. That's going to be at the Boston Marriott, folks, which is in Burlington, Massachusetts. Sponsored by Nadex. It's going to be a great workshop. It is a free workshop. You can sign up right on the front page of TFNN. We're gonna walk through what we're looking at, the analyzer, but we're gonna go up to Ontario first. We get Suzanne from Windsor, Ontario. Hey, Suzanne, how you doing?
Hi, Tom.
How you doing today?
Not so great. I'm sure XLE, so I just wanted to check with you. What do you think? It jumped my stop. It was a gap up, gap down, actually.
Okay, so let's take a look at it. The XLE is the Energy Select SPY to the lows. Where is she? The low is 61, the high is 80, and right now you're at the 79, 60 level. Okay, so this gap.
Would you suggest I flip my position to long?
No. No, but I suggest you absolutely get a stop in. You know, I
jumped it, so okay.
No, I understand what you're saying. What she's saying specifically, folks, is that that means you took it out too, though, because if you had to stop in, you would have got stopped at the open. But I understand what you're saying. What I would do is this. Okay, so this is what the XLE is doing right now. The XLE is up $1.55. Your swing point out there that it's going into right now is 79.62. It's hit 79.65. Let me just put this on a... Okay, so you have two... What you should do right now is this. Okay, so let me just see this extension. So the extension that we have, 78.28. What I'm doing is this, folks. I get this on a 10-minute, and I'm doing the extensions off the last leg up. Okay, so the last leg up was $1.28. And that'd be 78, that's 79. Okay, so this is what it just did. This just extended itself more than A to B equals C to D first off, right? So what you should do right here, right now, okay, is get a stop in. It's 79.65, it's already hit. So you're going to take the 79. I would put a stop at basically 79.84. Because if it hits the 87, that means it's going to go all the way up to 80.14. That's the way to do it.
To the high, previous high. Okay. Thank you.
Okay, have a great one. Have a safe one.
Thank you.
And if we go over and we take a look at ExxonMobil, folks, ExxonMobil is the largest weighting structure inside of that. What you're going to see is that ExxonMobil basically can't make its last swing point. Never mind the high. We're up $1.09, and you know it'll be tough for any of those to pull back today. But you know we'll see where that shakes. So we're back to our man, Mr. Darrell Martin, and folks. Okay, if you haven't listened to Darrell's program yet, remember that each and every trading day, 1 to 2 Eastern Standard Time, Darrell has a great program. You can listen to that program right on your cell phone, folks, at tfnn.mobi. Okay, brother.
All right. So we're over here and basically looking at, whatever market it is we want to pull up. And so I'll go in and I'll throw in, let's see. I guess we'll look at the S&P. We've been talking about that this morning, right? And so, I have, me and you both, we have like this tendency. We're looking at something to go short.
Yes.
we want to go short on it. Well, one is, it's always good to make sure that, it hasn't, basically hasn't went far enough to even have that expectation.
Right.
You just like fading trends.
Right.
And then two, has something happened at one of those major expansion points, because I know like how you set stuff up, you're like, these are my levels. When it hits here, then, I'm looking to go. And so what I do is sort of, very similar method. So like on the deviations, like on the 10 minutes here. And I had the S&P 500 up. Okay, so that's the big white chart over here.
Yes.
And so if I'm looking to go short on this due to, expansion zones, Fibonacci levels, Gartley patterns, whatever the method is that I'm choosing to use, then what I do all the time, and I always go through this, time and time again, is I'm looking on here. Let me add this in. It'll make it easy for me to draw on the screen. There we go. I'm looking for it to actually break the low, okay?
Yes.
Of the 10-minute bar that closed above the deviation level. Okay? So I make that happen. And I've watched it over and over and over again. Mainly, honestly, from this show is where I learned this method. Just calling it out like every day on the
right.
on my show.
Yes.
And I started watching them and noticing over and over and over again that once that happened, I either got my reversal or I got chop. Rarely did it ever hit it and just keep going in the same direction, like going back up. And so if I'm ready to go short right here, and I'm looking to go short, then I'm like, okay, well, this bar just closed above the 1.5 deviation level. So if I get, and I put about 5 ticks in there just to give myself a little bit of room. So I'm not going to like 1 tick, but 5 ticks. And so if I'm at 1610.5, then basically at 1609.25, then that's actually going to be my, true short level. Okay,
yes.
So right here if the price hits 1609.25, then I'm ready to go short. Okay? And what this does for me, it helps me sort of not like fade into the trend.
Which is cool, right.
Yeah, because it's so easy.
There's no doubt.
To just short while the thing's going, you're like, it's done, it's got to stop, you know?
Right.
And so it helps me not fade into the trend, but it gives me an objective method, an objective price level. And so if we go up here and we close above 2 deviations, fine, great. You know, if I'm long, I'm trailing my stop, by the way. So this does a couple purposes. One, not only do I have a method to help me with determining, if I do want to go short, it's at least got to hit this level before I can do it. But two, I can move my stops this way. I mean, think about this. You got in, let's say you were long the S&P this morning. I got long signals all morning long.
Yes.
Here's you can see all my trades right there. So I'm going long all morning, and it's hard to hold on.
Right.
I mean, it's so funny. Like, we all talk, it's so easy to hold on to those losses, right? So waiting on them to come back. But not that it's easy, but, it's just...
I'm with you.
We easily do it as traders.
Right.
But also, we get in a winter, and we just got to take the money. We got green. We can't let it go away. We finally got green, And so what this does is it allows me to have an objective method to trail my stops. And so this thing flies up, and you just want to get out. Okay? You're up, nice move. Pulls back, it closes up there. Now, I'm like, hey, you know what? If it drops below this, I could look at going short. I definitely want to trail my stop, and put a very objective method. Goes over here, closes above this level. Now I'm up, even another, almost 10 points from where my last stop was at. So I move that up there, and now I go right there. So now I have, again, an objective price point to let my profits run, which is, cutting your losses. I think after a certain point, after enough burns, you learn how to do that. But letting your profits run is so emotionally difficult.
And what happens, too, folks, and there's no doubt, and, intraday, just as Darrell was talking about, you always should be just raising them, and, on a day like today, you want to raise them dramatically, because there's no reason of giving anything back. And, when you do have spike highs that we have like this, especially on a Friday, you can expect more spikes. So what ends up happening is it can keep you in the trade as long as you just keep raising it, because if this... What does happen on a day like today, you shouldn't get a pullback. That's the bottom line. It should just keep going, so...
Right, and if you do, we got a trade. We got one ready. We found one in the, the spread scanner.
Right.
But we're making it actually fall back. So it helps us on the longs. So I still got longs on, still going. Helps us, basically protect our profits, but let our profits run objectively with enough distance to, do its thing. But, it also sort of puts, it helps me put my counter trender in check, because, I love going counter trend,
Well, I'm there right now, and it's going to get interesting, because this is what we've had, folks. The last 2 10-minute bars have nothing on them, and that's, right, if I go right into the futures market and you take a look at it, you're going to see what you have here. When I say nothing on them, I mean absolutely nothing. So watch this. Your first acceleration out of the gate this morning, you had 148,000 contracts. Your second acceleration out of the gate was 134,000 contracts. The last one we just did 88,000, and then we tested that with 47,000, and this one's going to die on the vine. So my correlation is saying we're at 1613 right now. The first level down would be 1611, which could be hit. That should be hit easy. Now, you get into 1611, folks, what will end up happening is that we'll be at 1605. That's how that shakes. So 1611 is going to be the first one, I suspect, before we get off the air. We'll hit 1611. That's only 2 points, too, by the way. But it's going to be how we hit that 1611, folks. Just so you can understand of how that is. And reward versus risk, no doubt. Well, it's there. It's there because, of course, the S&Ps are already up $20. So it's going to be interesting to see, will there be anything that comes back into that 1611 price point? If we go over to the SPY, if you happen to be in the equity markets and you're looking at the equity and you want to do the same thing, what the SPY did is this. First acceleration up was 8.6 million. That was right off the get-go. Then there's 7.1 million. Then the next one was 4.3. Now this is where it goes. Watch this. 10 minutes ago. So so the correlation is 4.3. We just did 3.3 against it, and that's 3.3 against 8.6. And this last one basically can't handle it. So
And basically, if I'm right, you're looking at the high volume spike bars, right? So like right here on 10-minute bars.
That's right.
So that's where you're getting your 1611 from, because that was that massive high volume spike. So that becomes the magnet bar.
That's right.
Full price back to it.
That's
and the
right.
one before that, we have a high of, that's where that last spike was. Basically 1605.75, 1606.
That's right. And
so
if
you're
it
going to
gets
hit this
into
price and then this price.
Yeah, and if it gets into it, the way it works, if it gets into it at all, if it gets into the 1611, you know, if we get into that by 1609 or something, then you're going to go right down to the other one. Which, by the way, folks, okay, that's just a natural retracement on intraday, okay? But that's a nice move. That's, you know, 1605 would be 7 points from where we are. That will get me exactly what I need. You know.
Well, that's perfect, too. And, I mean, you're talking about a perfect half deviation, too.
Oh, interesting. That's cool, man. Okay.
So like, we have 1611.75 to 1605.25. I mean, we're like right there.
Yeah, interesting. There's no doubt. Let's go over to the bond market. Take a look at the bond market for a second. Because what we've had with bonds, the jobs number came in, bonds came back hard. They're down almost $2 with 400,000 contracts. Now, the thing in bonds are going to need more than 400,000 contracts, because you know, this more than likely will pull back to even 145.27, but you're going to need about 600,000 contracts. Now, it can definitely do 600,000 today. Yeah, we'll see whether if it does, but it can do that kind of numbers. The euro is going to be tradable for quite a while, because the euro, folks, had basically, you know, the volatility is in the euro, no doubt about it. Between the European Central Bank, Draghi comes out and says that, you know, he very well could go negative rates. And then exactly. And so then this morning, one of the other directors of the European Central Bank said, no, they misunderstand them. You know, there was a misunderstanding. There's not a misunderstanding, folks, okay? There are already a few banks that are at negative rates. What negative rates are, by the way, folks, is that banks charge you to put their money in it. And for large corporate accounts, that has already happened in Europe, okay? So that,
wow.
Yeah, it's, you know.
Cyprus has that.
Well, yeah, they just take your money. Yeah, exactly. That's kind of interesting. Yeah, there's no doubt about it.
That's a negative rate correlation for you.
That absolutely is a negative rate correlation. And what has happened is that the negative rates, you know, have been out there for quite a while, actually. You know, in Europe, the first time I started was almost a year ago. So. What they don't want, they can't push the cash around. That's what it comes down to, folks. You know. So the yen this morning, the yen almost made it to the 100 point this morning. Let's see what she got. So the yen got to 99.27. You know.
Hey, let's go ahead and hop on over to Colorado. We got Jack calling in about ZSL.
Hey, Jack, how you doing?
Hey, Tommy, how are you, man?
Good, thanks. Good.
Yeah. Well, that's a good thing for a Friday morning, man.
That's a beautiful thing, no doubt, man.
Hey, I'm trying to get back into ZSL, and I'm a little confused right now.
The ZSL. So the ZSL is shot silver, folks, okay? Let's go take a look at this baby. So you want a much bigger bounce on silver before you go shot silver.
Yep, that's what I'm
you know, silver right now, folks, is at 24.02. And we've been doing 42,000 contracts. You know, it's not moved. I mean, I would let silver try to get into $24.84 before you do anything. You know, because that spike is the April 26th high.
Yeah.
You know, you got to let it get up there, man. You don't want to basically shot these things at lows.
No, you don't want to do that. That's for sure.
Okay, man. You have a great
Tommy,
one to
have
say.
a good weekend, buddy.
You too, man. This is Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We ended up 173. Nasdaq up 44. S&Ps are up 20. You stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. John Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. And don't forget, folks, we got our man, Mr. Basil Chapman, coming up next. And then we got Nico and Paige. We're going to keep you healthy from 12 to 1. And then, of course, Darrell's coming back 1 to 2. We got our man, Mr. David White, 2 to 3. And then we'll be back here from 4 to 6. And don't forget, folks, on Tuesdays and Thursdays now, we got a new commodity show. Andy Heck, great commodity show. He's got a huge amount of experience in the commodity market, so we welcome Andy to TFNN, nothing like growling and prowling out here.
I look forward to it. I'm going to be listening to it myself, man. I want to check it out.
Yeah. Oh, I tell you, man, he's told me some wild stories about physical commodities, folks, and, you know, just getting them around the world and some of the things that have happened in the past, meaning, you know, the commodity business is a wild business. I mean, there's no doubt that's it's even and when we're talking about huge physical commodities. You know, yesterday we was talking about basically moving sugar, and what it ended up happening is that they were moving sugar out, and what they do, folks, is that they use old ships to move sugar, because he was talking sugar at that point was only like 3 cents a pound, and sugar is at 17 cents right now. But this is so what ended up happening is that somehow dampness got into it, and it ended up being one big sugar cube when it landed to get processed. And normally what ends up happening is that they'd use vacuum cleaners to put it in and to take it out. Not a vacuum cleaner, but a huge hose. So they had
drill?
Yeah, they had to actually send folks over there with big jackhammers, do you know what I mean, to basically break the whole thing down again. So
talk about some costly storage.
Yeah, no.
Delivery.
I'll tell you, you know, it's funny is that when I was growing up in Boston, I worked longshoreman, because one of my friends, in fact, they still run the union up there. So even when we were 14, 15, 16, we'd get picked up as scallywags. And it was a huge amount of money we could make there, folks, being a longshoreman, because it was a union job. Yeah. But, oh, man, I'm telling you, when a flour ship would come in, flour ships are the worst in the world. So they're 100-pound bags that you actually would take out of the hole. And the hole would never end, folks. It would be on the ship for 3 days and just keep... And it just keeps going and going and going, but it was well worth the money, that's for sure.
See, the problem with that ship was, you know, those little packets they put like inside salt and, you know, different medicines.
Yeah.
They needed some really big packets in that ship to absorb the moisture.
No, there's no doubt about that. There's no doubt about that. No doubt about it at all. So let's go over and take a look at we'll take a look at this S&P right before we're finishing off here. So we're still at 1613 right now, and let me pull this back into 1 day. Okay, so this is gonna be wild, folks. So what you have is this: you know, basically now we've been up here for 40 minutes, and the first it got over the high, still at the high. There's been no juice coming down yet to that 1611, so it hasn't touched the 1611 yet. This one here said 1612.50. You know, we'll see whether it can even get the juice to come down into that level. What you do still have, which is, I can tell you, for a break top side, which is absolutely unusual. I mean, the volume has been weak anyway, but for a break top side like this to have nothing behind it, right now you're at 200 million on the NYSE, and if you can see, when it has an L beside it, folks, what it means specifically is that is still clocking out at the lowest of the year. Darrell Martin, Tom O'Brien. Don't forget, folks, if you are in Boston, up in that area, next Saturday, Darrell and I are going to be at the Boston Marriott, 8:30 to 12:30, sponsored by Nadex. You can check it out. It's free. Go to the front page of TFNN. Darrell, you have a great one, safe one. You stay right there, folks.